Hey guys, Joe Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look across markets. I'm going to be giving you a quick update as to what's been happening, and we're going to talk about a couple of trade ideas that I'm monitoring as the week progresses. But just to give you a quick market update, basically nothing's happening this morning because we are in the run-up to a speech by Fed Chair Jerome Powell before Congress, the first of a two-day testimony where he's going to be basically talking to Congress about the Fed's policy, and they're going to be grilling him and saying, often trying to score political points to sort of create nice, snappy videos for their own base. But the appearance by Powell is going to be watched closely by investors as he may give updates as to the outlook for interest rates and his view on the economy, and that could affect expectations about Fed tightening. So we're in wait and see mode ahead of that. You can see stocks are flat here. S&P 500 hovering around 4,050. Dixie hovering just below recent highs. US 2-year yields have backed off a tiny bit, still hovering in the 4.80 or the 4.80 sort of percent area. US 10-year yields have actually backed off a little bit more, failed to sustain the break above 4%, but we're still close to 4%, so there's that. Gold pulling back a little bit after its recovery from its recovery to 1850. Oil stabilizing after breaking above this this medium-term pennant that it had formed. So yeah, it's a pretty stable market. But in terms of some of the trade ideas, let's go back to stocks here. You can see we've stalled at resistance and the 21-day moving average, having found really key support. Let me get these moving averages back up at this very important technical area. You can see it's the downtrend from 2022 came into play in tandem with the 200-day and the 100-day moving averages. We also broke above the 50-day moving average. If we can muster a back above the 21-day moving average, then I think that bodes very well for the rest of the week. So imagine if Powell doesn't rock the boat too much, doesn't say anything to cause any revision higher in Fed tightening expectations, doesn't say anything to push yields higher. Well, this is a market that I think, technically speaking anyway, potentially wants to keep gradually grinding higher. So yeah, if we can muster a break today or tomorrow above this 21-day moving average, I think the door is open for a move back to the 4,200 highs that we had recently, or close to 4,200. Of course, let me bring up the calendar and we can talk about some of the other key events that we got this week. Other key macro events in the US are going to be important as well. So tomorrow we've got the JOLTS job openings, ADP jobs data, and all that comes out ahead of Friday's official jobs report. Now, you know, markets, if the S&P 500 is going to push higher towards the 4,200 level, this data can't be too hot. Also, you probably don't want it to be too weak either, because that could trigger recession fears. You want it to be kind of Goldilocks, not too hot, but not too weak. And if things go like that and we get a not too hawkish Powell, then, you know, the stage is potentially there for a continued grind higher. Now, listen, I don't think we're going to go from 4,050 to 4,200 in a week, but I'm just saying that in the coming weeks, this month perhaps, we could get a grind higher. So, you know, if we do get a convincing push above this area, then you might want to be looking at dips, back confirmation, and then to get the push higher later on this month if the fundamentals justify it. And we'll be talking about the fundamentals, of course, as things unfold in the days and weeks ahead. But that's something I'm looking at with the S&P 500. With the Dixie, I'm thinking, you know, we're finding some pretty nice support here just above 104. I might even add a little level there. Although maybe we're going to be forming a descending triangle here, which these often break to the downside. But if it was to break to the upside, I still just want us to hit this resistance level that I was talking about when we first broke out of this downward trend channel here. So I'll be monitoring for any moves there. But I mean, potentially, 104 is a nice area to be adding to longs to target the upper 105s. But, you know, aside from that, I'm kind of in monitoring mode for a lot of these asset classes. Like, there's nothing really too compelling for me with gold right now. Not any technical setups that I really, really like. Oil, you know, I think oil potentially, I think maybe the move's already happened though, or the best time to get involved was when we went up, then we pulled back yesterday to this 78 area. That was where you really needed to get in if you were going to target a move higher towards this level after the breakout of this pennant. Maybe there'll be another chance, but the boat's probably already gone on that trade. But yeah, watching stocks basically. That's probably my favorite one that I'm looking at the moment. But yeah, guys, in terms of what else is going on this week, oh, uh, other key events to be keeping an eye on. There's been quite a lot of central bank action, like we had a 25 basis point rate hike from the RBA, although their tone on inflation and some of that other stuff was a little bit dovish. So we're going to be watching, or any Aussie traders should be watching further remarks from Governor Lowe uh, during Wednesday's Asia Pacific session. You got the Bank of Canada coming up as well with a rate decision. You got ECB President Lagarde speaking. You got the Bank of Japan with a interest rate decision later this week as well. UK GDP, Canadian unemployment numbers coming out at the same time as US employment numbers as well. So, you know, if you're trading any of these other dollar pairs with the loonie or with the pound or whatever, you need to be watching all of this stuff too. But yeah, guys, I hope you enjoyed the video. I hope you all found it informative, and I will see you all in the next one.